Good morning. I'm here with Theo to take you through our annual results. It's been an incredibly challenging year for us on farm, and what you've seen your cooperative respond to that challenge and do everything we can to get money into our farmers' hands. And so Theo and I are going to talk you through what has occurred over the past year. But before we do that, your co-op's at its strongest when we all pull together. And so what we've done is we've asked some of our farmers and some of our staff from here and around the world to take you through some of the highlights of the year.
Every day, Fonterra and our farmers set out to deliver the best quality dairy products and to get the maximum value from every drop of milk. For our farmers, it starts early in the morning, collecting the freshest milk from cows that graze on the land that's been cared for, in many cases by generations of the same family.
Milk is the lifeblood of our cooperative, and once it leaves our farms, we have dedicated people right around the world who ensure the milk is collected, processed, shipped and sold so that it meets our customers' and consumers' specific needs.
Kia pera, kua panone haere a Fonterra I tā mātou pakihi, kia tupu te maiatanga me ngā hua, kia ko ngā anō huki. He ori te tā mātou whakahaere pakihi, ki o tātou kaiahu whenua whakahaere pāmu, aro whanonga pūtia. Iu mātou ki te rautaki, ā ki te whai hua te mahi whawhati ko.
我々は高い価値の製品をより多く生産するために工場において製造能力増強を目的とした投資を行いました。この投資によって我々は乳原料やあるいは消費者向け製品、外食用製品など最も価値の高い製品への生産シフトを柔軟に行うことができるようになり、農家株主の皆様への利益還元を大きくすることができます。
Like doubling the amount of cheese slices we produce at our Eltham site in Taranaki, we now produce enough cheese there to fill 3 billion burgers. We can also meet our customers' demands by producing more than 350 different types of cheese, and a new dry-up hire tour and 3 plants at Edendale have given us the means to deliver more product more efficiently.
We also doubled production capacity for mozzarella, which is being shipped as quickly as we can produce it to China and other major markets. We've invested in a state-of-the-art cheese plant in Australia and opened a manufacturing facility in Indonesia. And at Hautapa, we've upgraded our lactoferrin plant so we can make more of the highly valued iron-binding protein found in milk, known as pink gold.
Much of the added value has been created by our team at the Fonterra Research and Development Centre through product innovation and intellectual property. We're behind most of the Anchor Food Professionals product range of special creams, cheeses and butter used globally by chefs and restaurants, along with the world's first 100% pure spreadable butter and other world-leading consumer products.
我们将高温灭菌奶供应链中的每一个环节进行精简，大幅缩减了我们高温灭菌奶产品抵达中国的时间，从100天缩减至34天。我们还将我们的气末库存大幅降低了25%，最大化我们合作社的受益。
Our new track and trace technology is world leading within dairy to help ensure our customers and consumers have an authentic Fonterra product. The technology is complemented by the introduction of anti-counterfeiting measures and tamper evidence seals that as a total offering deliver trust.
And in this technologically disrupted world, we're staying 2 steps ahead of this rapidly changing market by becoming our own disruptors. We're looking to the consumer trends of the future and looking at how we can meet them with new dairy products and ingredients.
We have pulled together as a cooperative, stayed on course and on strategy. We've increased return on capital and strengthened our balance sheet by reducing debt. We're doing what we said we would, and we'll continue to make it happen by working together in true cooperative spirit to ensure we make the most from every single drop of our milk.
It's really great to see our people around the world, John, but I fully agree with you. It's a challenging year, but what I would also say a defining year, because in that challenging environment, I think what you just said, the co-op, and that's farmers, but also the business, we had to adapt because circumstances were so tough. And where farmers adapted very quickly to the new environment, we went through this transformation program to really go after each and every dollar and bring it back to the farmers or to the balance sheet of our cooperative. But what I'm proud of as well is that next to driving that cash, that we also kept on investing in our communities and around the world, and that we kept on investing in our future, in our people, but also in programs like Disrupt. What is the new business out there for us, right? What is the future? So we didn't focus only on a few couple of months, but we really invested next to driving that hardwired cash. And I think we've done that well, but we need to make sure that it's sustainable because it's volatile. Markets are better now, or are showing better signs. But you and I always said that we fundamentally believe in the strength of dairy, and that's actually what's happening. But we cannot be complacent. We have to go and fight for cash every day.
Look, Theo, we very much want to talk about the year that's just been and go through in some detail the results of that work that's been going on in the co-op. But I think before we do that, it is important to pick up on the other point.
Absolutely.
It's been very pleasing to see that dairy prices, as we have talked about, have started to improve. The market is coming back into balance. So being able to move, as we did yesterday, from 475 to 525 has been very important for your management team and the board. And what you'll also see, and I ask you to go to your advance rate if you haven't done so already, we have pushed as much as we can immediately into the cash flows to support what is clearly cash flows which are under pressure on farm. So I know that's been the focus.
And John, what we also had, we kept the earning bracket the same because sometimes people talk about high milk price means shift in earnings, but that's exactly what we want to drive here, that milk price should be strong, that means strong demand, and that means that we are in a winning mode for market share. So we need to really keep our earning bracket on the same level. And that's a strength in this message, I think.
So for budgeting purposes, use a 40-cent dividend. Of course, we will make that decision in a year's time for the year that we're in. But that will give you a $5.65 payout. Look, it is very early in the season though. So please, take care, be cautious. We will keep you updated as we move through the year because clearly, as we've talked about for the last few years, we're seeing this volatility that's been knocking us around. It's not going away, but pleasingly, it is moving in the right direction as we do see that market starting to come back into balance. So back to the year that we've just been through, Theo. What we've seen is the real strength of our cooperative coming through. It's been a balancing act. While there has been absolute focus within the management team, and Theo will talk about that, to ensure that we have absolute financial discipline in the business and shift every last litre of milk that we can into the highest value product. What we've done is we've ensured, in the basis of having a very low, clearly a low global dairy prices and therefore a low milk price, is use that strength that we've created within our cooperative to get that cash flow through to you as farmers as quickly as we've been able to. It seems like a very long time ago now, but wasn't it a challenge last August when we saw those milk prices drop quickly down to $3.90? And at that stage, the Fonterra stepped in. We provided that cooperative support loan. About 76% of our farmers took that up, about $383 million. And that will be paid back. It's interest-free and it'll be paid back when the milk price moves back above $6. And we'll keep you informed on that clearly as we move through over the next couple of years.
But John, next to all that, we've done a lot through farm stores as well, and that value proposition for farmers has also paid off.
Yes, absolutely. And so to Jason and the team, feedback from our farmers, particularly our younger farmers, and I hope that you've been able to use the opportunities that have been provided, the rewards programs, the deals that have been put up. I know it's only small in the context of things, but these items do help being able to bring costs down on farm, and it has had a meaningful impact. And we've had a lot of feedback from our farmers. So, Theo, that's certainly a very good and strong initiative.
Yeah.
We need to keep that up.
Yeah.
Look, I think if we move forward to the financials, our priority, as I touched on, has been to ensure that we create as much value as we possibly can from every kilo or every litre of milk that comes into the co-op. And we've done that this year, just under 5 billion liquid milk equivalents, another 340 liquid milk equivalents going into higher earning products. And also within the cooperative, a real focus on changing the way that we are able to respond. The reality is we're a big business. We're a significantly sized business. Massive. And it's all been about, and you've heard us talking about this, but what we're seeing is a real change in what we call our mindset of our people. Being able to respond faster to our customer requirements, faster to end user, our consumers. being able to adapt and adjust to a marketplace that's changing rapidly. It's what you expect of us, but it's very pleasing to see those results come through.
Here's a rundown on the results. This is a low payout year because of the weak global prices for dairy that farmers globally have faced this year. Our farm gate milk price is $3.90 per kilogram milk solids. The 40-cent dividend, 60% higher than last year, delivers a cash payout of $4.30 per kilogram milk solid. Our sales volumes are up 4% to 23.7 billion liquid milk equivalents, or LME. Revenue is down 9% at 17.2 billion, and this reflects the low farm gate milk price. But our normalised earnings before interest and tax increased by 39% to 1.4 billion. That's because we're moving more milk into higher returning consumer and food service products. At the same time, we're securing sustainable ingredients margins over the global dairy trade benchmarks, especially through specialty ingredients and service offerings. Net profit after tax is up 65% to 834 million. Through increased earnings and continuing financial discipline, we've increased the return on capital and strengthened our balance sheet by significantly reducing debt. As a result, the overall return on capital is up from 8.9% to 12.4%.
You want to take us through some of those results?
What you touch on is spot on. The value creation is key. But back to the strategy, it's really volume to higher value at velocity. And let me explain, because there's sometimes some misunderstanding about that, John. We are a cooperative. We have sold 24 billion litres of milk, but we want to really shift that to the highest possible value, and that drives our P&L. And you see that on this slide, that our gross margin was actually very strong. So good prices in market. Of course, sluggish demand, but still we achieved the right price levels. We reduced our cost base, and you know that every year on year, we are pushing our cost base down, and that's why this value creation is so strong. Not only in the profit and loss statement, but also on the balance sheet, because CapEx was under control, working capital was, I would call that for a cooperative our size, world class. And we have done divestments of the non-strategic assets. So that has driven a really strong profit and loss, strong balance sheet, and therefore a strong cash flow.
Yeah.
And that's for me the whole picture of value creation.
And use that balance sheet to support our farmers. So the balance sheet was 44.3%. If you take into account the dividend payments that we brought forward and the advance rates that we brought forward based on what we would normally do, that balance sheet would actually be about 42%. So 42. It's a very good result given where we've been. So strengthen the cooperative, but try to keep cash flowing as much as we can onto farm, which of course where it's been so challenging. Look, Theo just touched on it, and you're right, understanding our strategy. It's what we call V3, volume into value at velocity. Take us through some of the numbers within the business, Theo.
Yeah, I think, or when we look at our big businesses, of course, the big machine ingredients, the whole world has shifted again a little bit. Where China dropped out for almost a year, China is back into the market, and it's amazing to see how our people can shift the game very quickly. And like I said, in a difficult environment, still achieving their price premiums, driving the optionality and the optimization at home, no peak cost, high efficiencies, lower quality costs. So that big machine of ingredients in a challenging market has performed very, very well. When you look at consumer food service, you've touched upon it already, John. I mean, we've completed the 380 million litres more in consumer food service is going to 1 billion litres of milk right now, and 1 billion is really a massive amount. Yeah? And in consumer, we're growing double the market, and in food service, we're even growing triple the market. Of course, we're not everywhere, but where we are focused and we drive our business hard.
It's been a challenging market, Theo. A lot of milk coming out of Europe, attacking us in much of our markets, as you would normally expect, particularly through Asia, Middle East, Africa. But within the business, there has been some real movements and success within the business. And of course, one of those is China. Would you like to go through in a bit more detail of what we're seeing happening in China? And there's a lot of questions asked, there's a lot of interest, and it is so important to our strategy.
Yeah, I'm happy to do that, John, and you will see a slide. Here on the left-hand side, you see that our group strategy has never changed for the last 5 years, and it applies for the group, but it also applies for China. The strategic platforms of the group are 100% apply. We have very strong brands in the Chinese context where we can really drive that value or the value per liter of milk to the highest possible level. And when you look at these numbers, I mean, in 2013, we had 4 billion liters of milk sold in China. We've shifted that now to 5 billion. And that's basically on 3 key categories. It's our ingredient business, where there was some pressure, but you can see here, we kept our volume the same and we grew our market share. On consumer food service, we have done a tremendous job. We have more than doubled it from 400 million to 1 billion. And in advanced nutrition, where we say so baby food and lean, we have grown the business, but that's basically because the being made volumes are also in here. When you look at the right-hand side of this slide, then you can see that majority of what we sell in China is New Zealand milk. So it's your milk, and that milk goes into the highest possible value creation and driving dividends.
It does, but one of the challenges, of course, that we have had in the moment in the current dairy prices globally, our farms in China are no different to our farms in New Zealand, impacted by a very low milk price. How do you see the farm businesses performing at the moment, Theo?
That's right. So we see low milk prices, same as in New Zealand. We have really changed the game and driven efficiency, cost out. Yeah. So same story with the market turning. China will also turn. But what you can see here as well is that China farms, in the context of the total 5 billion milk we sell in China, is a very small part of the total. So John, there's a few challenges here, definitely. I mean, China milk prices are similar to what you see in the world, they're low. So our team has done extremely well by taking cost out. What we've seen in farms all over the world, the costs have been taken out. We did exactly the same. The next step is really connected to our value propositions. We have strong value propositions. Our customers, our ingredient customers, are also asking for fresh milk as part of the portfolio. Yes. So that opportunity we need to take, and we need to grab.
Yep. So it's a bit of a snapshot on China. The other country other market that's of course had a lot of focus from board and management over the last couple of years has been Australia. Good to see some better results. Still got a distance to go yet, Theo, but some better numbers out of Australia.
Definitely better numbers, and there is a turnaround. But what you can see is that we had no connect of, let's say, what was being earned in market to milk price. That connect is there at this point in time. So that's the key, one of the key drivers of the turnaround. But and I have to give credit to the Australian team and to Judith here. That is relentless transformation for the last 3 years, taking cost out, stripping down the portfolio where we didn't make profit, selling the assets which are not needed for our strategic footprint. So the strategic footprint is cheese, whey, nutritionals. Yeah, we're very clear that that footprint is there and is approved. We still need to do a few things, and those are not small things. I mean, Stanhope needs to be finalized. We need to produce cheese. We need to fill Darnham. You saw the approval of the Chinese authorities for the Darnham JV. So we're going in the right direction. We're making the right step. But that industry, John, and you agree with me, things are going to happen in the industry. And we are battle fit right now to go for market share and to really be a leader.
So thanks, Theo. A very good snapshot of the key events of the year that's just gone. If you want any more information, I'd really encourage you to have a look at the annual report. You can get that online. There'll be physical copies available as we go in the weeks ahead. And also you can get a snapshot of these numbers that we've put on. Will also be available on the website. Look, it's been a good solid year from the co-op. What we've seen is a significant change in what we call mindset, the way that we operate. It's been tough on our people. But it's the co-operative doing the right thing, and it's the right response given how tough it's been on farm. So record year for the co-op from an earnings perspective, 51 cents earnings per share, and we've paid a dividend of 40 cents. And the focus during the year, given that milk price was low, was to get cash as quickly as we could through to our farmers. So your cooperative's getting stronger and we are seeing global dairy prices starting to improve. Demand is still strong around the world, but we've pleasingly seen, finally, we've seen dairy farmers around the world respond to lower milk prices, and there is a lot less milk production around the globe today.
And less inventory.
And very low levels of inventory. So we are cautiously optimistic that these prices are going to improve, and that's what's driven our $5.25 milk price lift that we've just announced. We'll continue to watch these markets very closely and we'll keep you updated as we move through the year. Look, I really encourage you to attend the annual results roadshows that we've got next week. Theo and his management team will be joining the board. We've got 45 odd meetings, I think it is, around the countryside. So really good opportunity to get out there and have a chat. I know it's a busy time on farm, but this is an important time for our cooperative, so I really do encourage you, if you're able to attend the meetings. We'll also be talking about governance and representation. So at the end of our annual results meetings, we'll spend a wee bit of time having a chat about governance and representation. We are bringing an updated recommendation to you, looking for your support at a special meeting in October. And so earlier in the week, Duncan Cool, the Chairman of the Shareholders Council, and I shot a short video, so I'd like to show you that. But just before we do that, Theo, thank you, and thank you to you and your team for a good, solid year just gone, and we know we've got another big one ahead of us.
We keep on going.
Absolutely.